cause I feel on top of the world. Chill with my favorite girl. Put it on ice, cause I feel on top of the world. Chill with my favorite girl. Put it on ice, cause I feel on top of the world. Chill with my favorite girl. Put it on ice, cause 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 ice, cause
What is popping, everybody? What's good? What's good? We're gonna get this thing going in about 2 minutes. Feel free to go ahead and just share this link out to anybody in your team or community that you don't see on the call. And if y'all could do me a huge favor, take a picture of you just being on this session. We're gonna get things going here in like I said, just about 2 minutes. So go ahead, share the screenshot, let people know that we're gonna get going and things are going to be starting officially in a couple of minutes, and they're not going to want to miss out. Go ahead, drop a screenshot in the group chat, do me that solid, and let's get the numbers up for tonight's Wall Street Wednesday session. Excited to be here, excited to be sharing in the presence of some beautiful people in the chat. We got Aiden. What's good, Aiden? Amy, how is it going? Dayton brother, what's popping, bro? What's popping? We got Dubs in the chat. What's good? What's good? Lorenzo, Richard, what's going on? Samantha, Saxon, Travis, good to have you all on here. Great to have you all on here. But like I said, we're gonna get this thing going in just about a minute and what is it? A minute? Yeah, a minute. Yeah, just about a minute now. So go ahead, drop those screenshots in the chat. Send the link out to whoever you think will find some value from tonight's call. And we're gonna go ahead and get this thing going very, very soon. Alrighty. What is popping, everybody? What's good? What's good? Drop in the chat where you're tuning in from. Let me know in the chat. We're gonna go ahead and get this thing going. I'm back home. I'm at the at-home setup. Last week we were in Barbados for the Wall Street Wednesday session, and that was a vibe. Had a great time out there, and excited to be back in a setting where I just have a little bit more structure and routine. I don't know if, for those of you that, have been on big trips or a number of travels over a period of time, if you guys can maybe relate to the just appreciating having some structure and being in one place. That's something I've come to really appreciate, and being back home. And I'm gonna actually be here now for quite some time. I've been traveling all over the place for the majority of this year so far, and so it's really it's refreshing to be back home. I do have a couple instances in June where I'm going to be gonna out of town as well, but they're going to be for short durations, and so really just soaking up and appreciating the time at home that I do have, and of course, looking forward to the next travels when they come. But I'm gonna go ahead and share my proper screen here in a second. Boom, there we go. What is good, everybody? We got who we got in the call? We got Vegas out here. What's good, Lorenzo? Again, good to have you on the session, my guy. I'm gonna go ahead and record this thing as well. Record to the cloud. Perfect. We got Fort St. John, I believe it's FSJ Fort St. John. I don't know why it's always a tongue twister for me to get that one out. We got Toronto out here. What's good, Keisha? What's good? Good to see you on the call. Kamloops. Let's go. What's good, Fitty? Fitty, where are you tuning in from, bro? You're out here from the UK, right? If I'm not mistaken. This guy's up. It's like gotta be like at least 2 a.m. over there. So shout out to you for being on the call. You could be sleeping right now, but he's not sleeping on his dreams. He's on the call. But guys, we're gonna go ahead and get this thing going. 2:07 a.m. Crazy. Shout out to Fiddy one time in the chat for tapping in at that kind of an hour of day. Most people are asleep at that point, but for real, just like what Sam's saying in the chat, he's a grinder, man. Sam, and you're a grinder out here too, man. It's good to have you on the call. Shania's on the call. Wow, good to see you, Shania. Was popping. We're gonna go ahead and get this thing going, just because I want to be timely with these sessions. For those of you that have been on these sessions before, I mean, there was a session that we did, I think it was 2, maybe 3 weeks ago, where we dove into different ways of really using the Fibonacci tool, and we were on here for like 2 hours, man. It was crazy, and I obviously respect your guys' time and want to be more mindful with these sessions of just how long we are spending on these calls. So let's go ahead and, without further ado, dive right into it here. I'm just going to make sure that everything is good to go on my end before doing so, of course. And I think what I'm going to do for this session is we're probably just going to use the basic This is what I'm going to do. I'm going to stop sharing here. And as much as I would like to use OBS for these sessions, I think it's actually just a little bit smoother to do it directly from Zoom. So this is what we're going to do here. We're going to go ahead. We're going to do that. And we're going to do this. Bing, bang, boom. All right. Y'all should be able to see my screen now. Just let me know in the chat if you guys can see this. And we're gonna stick with kind of a more chill, at the beginning, we'll share that cool screen. We'll have the just chatting screen up for a little bit as well. But I think, just keeping it cool, calm, and collected with Zoom is also it's great. It's a little bit easier for me when it comes to teaching as well. If I have like the OBS screen pulled up, I got to annotate on the other monitor, and I'm like looking over here when I should be looking over here. And so this is the way to go. But let's go ahead and dive into it, man. So there's a couple of things that I want to cover on today's session. We've done sessions frequently, more recently that have been more lesson oriented. Last week we did a bit of market outlook and recap. This week we're going to be doing some more market outlook and recap as well. And then if there's any sort of specific topic that you guys feel called for me to dive into on tonight's session, if we have time, I'm more than happy to dive into it, or we can save it for next week's session as well. So right now, being that it's the beginning of the call, go ahead and just drop in the chat if there is something specific that you would want me to touch on either this session or next week on the Wall Street Wednesday session next week. Feel free to just drop it in the chat now, and then I'll take that into consideration as the evening's progressing and going forward. But to start things off, and I'll come back to that in a little bit, I really just want to go over a trade. And for those of you that were out in the Toronto, in-person trade room that we did last night. This is something that I talked about, and I did mention I'd be bringing it up on Wall Street Wednesday session as well. So we're gonna go over this setup that I took yesterday in the morning during New York session, and basically what led me to take this trade. And ultimately, the outcome of this trade was fantastic. This ended up being, for the time and duration that I was in this trade, it was just under a 1-to-7 risk to reward. So for every $10 I'm risking, I'm making $70. For every 1% I'm risking, I'm making 7%, on that setup. And this thing actually continued even higher, where at the highest point, this thing ended up running for a 1-to-13. Last night when we were in Toronto and we were talking about this setup, price was, I think, more or less around here. And so we did see a pullback overnight, and then we saw a continuation to the upside, which was something I was anticipating. But for me, man, and this is a nugget of gold for those of you that are seeing this live or on the recording, you'll never go broke taking profits, man. Okay, you got to pay yourself. Don't fall into that fear of leaving money on the table mentality, because there's so much opportunity. It's better to just close out of a trade that's in profit, take that profit home with you, and then go on to the next one, versus you waiting for maybe a 1-to-13 risk to reward, like this trade would have been if I held it, and then price just at a 1-to-7 ends up reversing and going against you, get hit break even, right? Every time it's going to make more sense to pay yourself than to kind of just hope for that Hail Mary that sometimes we'll see play out and you don't get to catch the full move, but other times it's like you hope for it to play out and it doesn't play out, and so it's better to always just take that profit. But let's go ahead and talk about really what led to me taking this trade. First thing that I'll always consider any analysis that I'm doing, any currency pair, any commodity, any crypto, any stock, you name it. It could be corn futures. Okay, I'm going to be doing the same approach with anything I'm looking at in a chart. I'm always going to be starting on something like the daily time frame to get an overall gist for what the trend is. So if we're taking a look at this, is USD JPY. All right, and we can see that pretty much since the beginning of this year, we have been bullish. All right, there's no denying that we have been in an uptrend on UJ. And so for me to be taking a position, regardless of what time frame I'm looking at, with the exception of maybe some of the smaller time frames that are going to be in what we call a counter trend, just because of the fact that the daily time frame is bullish, I'm going to tend to lean towards taking buys. All right, you want to trade with the trend, with the institutions, and there's clearly a motive for price to continue trading higher here. And yeah, there's maybe some economic reasons behind the trend that we're seeing as well, but a lot of the times, news or economics is just the excuse for price to do what it was already going to do anyways. Okay, so all that to say, ultimately we're in a bullish environment on the daily 4-hour time frame as well. we can see that, for the most part, while we have seen some bigger retracements as a result of this huge move up on the daily, we're still actually maintaining market structure and seeing these higher highs and higher lows consecutively. And so if we actually zoom into where we were on Tuesday, for those of you guys that don't know, I will rarely trade on a Monday. All right. That's just me personally, based on the data that I have over the past 6 years. Monday is a day where traders are induced to take positions, but it's rarely actually where major moves take place. You could take a look back at all kinds of data on all kinds of different assets, and you'll see that Mondays are typically just days to induce a bias or induce traders to position themselves to then get wiped out on Tuesday, Wednesday, Thursday, and as the week continues to progress. So my three main trading days are Tuesday, Wednesday, and Thursday. And at a future session, maybe I'll dive into, really how you can anticipate the high or the low of the week to position yourself with ultimately the major move that then ends up taking place. We won't talk about that on today's session, but part of my looking for this buy was, in a way, me anticipating the low for the entire week. Now, the entire week hasn't played out, so we don't know if this will be the low for the week, but it is something that I would be confident in saying now that we're at Wednesday with, if we go into current price action, this is where we're at. There's probably a good chance that this wick where I ended up taking the buy was in fact the lowest point that we're going to see price trade into for the entire week. So, I mean, let me know in the chat. Maybe this will be something to consider just because I didn't see anybody drop anything specifically on the topic of like things you guys would like me to dive into. But just by a show of W's in the chat, how many of you would be curious or intrigued to learn how you can catch the top or the bottom of every single week, or not every single week, but on a regular basis, consistently catch the tops and the bottoms and understanding how to gauge that? Let me see some W's in the chat if you guys are interested in that. And then we can touch on that today if we have time. And if not, we can talk about that on next week's session. So, because this is the thing, like we will see, and I think a lot of people, it's very easy to get caught up on the smaller time frame kind of nitty gritty stuff. I didn't even talk about this last night, by the way. For those of you that were in Toronto, you'll be like, "Whoa, I didn't even think about this. This is a cool trade." But Don, you didn't even mention anything about catching the bottom of the week, the lowest point that price trades to in the week. But this was a consideration, and so I'm bringing it up now. And it does look like there's some demand for that. So we'll take a look at that at some point, either this evening or tomorrow, or not, sorry, not tomorrow, next week, depending on the time that we have. But there's a lot of different things that will go into my analysis as more or less considerations for taking positions. What's good, Jordan? I see you in the YouTube chat. What's good, brother? Good to have you on here. But so we'll talk about that in either in a little bit or next week. Like I said, I'm giving you guys like I'm leading you guys on. You're on a cliffhanger right now, trying to probably got some questions on how you can go about analyzing and anticipating those types of things. So we will talk about that at some point. But this trade, of course, trend. What are we seeing with the trend? We're in a bullish trend. The next thing I'm going to consider is, okay, cool. Based on the price action that we're seeing on Tuesday morning, and I think there was someone that dropped in the chat. I'm just going to zoom up here on the Zoom. Interested in them big swings or reversals for sure. Absolutely. Absolutely. Do you place trades on Friday? And if so, what times are best? So for me personally, the main days that I will trade are Tuesday, Wednesday, Thursday. The only time that I'll really look to position myself on a Friday is if it's, and same with a Monday as well, or any day that's not Tuesday, Wednesday, Thursday, is if it's number one, a crypto, because crypto tends to move differently. I think we can all agree that, crypto is sometimes just out of pocket when it moves. It's like, it's a Sunday night. Why are we seeing a new all-time high on Bitcoin? We've seen that happen time and time again. So there's some exception with crypto. And then the other thing I would maybe consider to take a trade on a Friday, number two, is if it's NFP. All right. If we have major news where, for example, just to pull this up, if we have major news where, for example, next week's a great example of this. Next week's the first week of June, we have double NFP. If it is and this is a key point, it's unlikely that I will trade a Friday if there's only USD, NFP, all right, non-farm payroll or non-farm, employment change, unemployment rate. Whereas if we have both USD and CAD, it's guaranteed to be very, very highly volatile. Not that it isn't when it's just USD, but in terms of the consistency in being profitable on a Friday, for me personally, it has to be both. Typically, will be both USD and CAD that we're seeing those unemployment rates and employment change, uh, news releases. So next week will be an example where I actually will be on the charts on a Friday, and it's usually only like one Friday every month, and that is the first Friday of every month for those news events specifically. And sometimes we'll see just USD, NFP one week, and then the next week just CAD. But usually my ideal scene for taking a trade on Friday would be when we have both unemployment rate and employment change or NFP news events happening together at the same time. So we got Julia in the chat as well on YouTube. Was good. Was good. Good to see you on the call, mon amour. But yeah, so just to answer that question a little bit more straightforward, I'll trade Fridays if and as to when there are certain news events. These are the ideals, ones we're seeing for next Friday. And the time at which I'll execute trades will be no different than the Tuesday, Wednesday, Thursday that I will normally be engaged in the markets, which is just to give you guys an idea, it's usually from around 8 a.m. to 11 a.m. That's my execution window. And the vast majority of the time when I'm executing trades, when there's no news events, they actually tend to take place between 9 and 10:30 a.m. So with, again, with the exception of news, sometimes there'll be news at like 8:30. I might position myself a little bit before news in anticipation of what news is going to do, or just after news as a result of what news has done, I'll look to take a position in accordance with that. So next week, we'll actually talk about, and I'll go over a bit of a game plan that I usually have for these double Canadian dollar and US dollar NFP releases, and how you can go about framing, a strategy that makes sense around that. But yeah, great question. Just wanted to address that. And it's Eastern Standard Time. The times on the calendar here are in Eastern. If you wanted to change these to your local times, you would just click the clock in the top right corner, and you could take a look at, if you're in Pacific time, and I save these settings, these are now going to reflect in PST. All right, so forexfactory.com, great resource for anticipating when news is going to take place, when we're going to see, some higher volatility and things of that nature. But now I got to figure out how to get it back to Eastern. So let's let's see here. Eastern time. Boom. All right. So this trade specifically, USD JPY, how did I go about positioning myself in this trade? We'll spend, maybe 10 minutes talking about this, and then we'll transition on to some other material that I want to talk about on today's session. Bitcoin outlook, what I'm anticipating with crypto. And then if we have time, maybe I can talk about, how to gauge and position yourself to catch the top or the bottom of a weekly candle being printed, and really position yourself in a big way in that sense. So with USD JPY, the thing that I was looking at and taking into consideration is, number one, what trading did we see take place on Monday? Okay, so this is what we saw on Monday. Pretty much, Tuesday, where we saw Tuesday start to take place was actually right in here. And the thing that I'm taking into consideration here is the fact that, this is a range that was created on Monday, or basically from market open on Sunday. You can see, market open right here. This was that Sunday, at 6, or sorry, it would have been 5 p.m. Eastern Standard Time. We see market open, we see price sells off, and then we're in this kind of range for the majority of Monday. We have relatively equal lows, and we have relatively equal highs up in here as well. So usually what I'm going to look for on a Tuesday is for both the low and the high of Monday to get taken out. This isn't something that happens every single time, but it's something that I'll take into consideration. And this is a great thing to consider as well when you're using a tool like Monara, when you're using a tool like, the products and tools that we have with EA, for example, Monara, where there's setups that you can use in confluence with the high and the low of the previous day as targets, in addition to, of course, the targets that are given from that tool. So this is something I was considering. Relatively equal highs, we got relatively equal lows. And on Tuesday morning, I'm looking at this, I'm seeing this, okay, cool. This is the data that I have to go off of. And if we take a look at this on a smaller time frame, okay, we can actually see it's already kind of drawn in here. Small time frames. All right, this is a key point. A lot of traders, okay, that are retail trading or trading in confluence or in accordance with the institutions, the market makers, whatever you'd like to call it, will be on the charts during that London and New York session overlap. So there is an influx of volatility. There's an influx of volume in the market as a result of more eyes being on the charts, if that makes sense. And of course, the institutions are doing their thing as well in Europe and as well as New York, okay, with the London, New York sessions, respectively. Now, what that means is that we will see small time frame traders, we'll see intraday time frame traders, and we'll see sometimes, the swing traders and higher time frame traders as well engaging during those highly, volatile times of day, the overlap. So one thing that I was talking about yesterday at the in-person training was that we'll see that on the 1 minute time frame, which, taking into consideration those small time frame traders, those scalpers, if you will, this is the price action that's actually being created at the same area that we've identified as a quote unquote support previously. So we have price trade into it once, little zoning this out from the high to low, price traded into it twice, and now we're actually consolidating or kind of creating this range inside of that yet again quote unquote support. So for me, the way that I look at this is, not necessarily as an opportunity for me to enter right away, but rather, hey, there's probably a lot of traders, especially with this 1 minute time frame price action, that are selling these highs and buying these lows. Look how many touches we have at this low. We got 1, 2, 3, 4, real, quote, reactions or points where price respected a low. And so there's a lot of retail traders, I should say, that are looking to position themselves with buys with their stop loss somewhere beneath these lows. All right, where exactly? Well, maybe, just because we had these lows right here, maybe some people have a tight stop with it at those lows. Maybe they have it just beneath this previous low over here on the Tuesday at around midnight. There are guaranteed to be stop losses beneath these areas. Okay. And so the institutions, the smart money, all right, the big players, the market makers, understanding how they have to go about positioning themselves, they will look to manipulate these areas. Look at this. We even get another reaction. The buyers are happy here. Price comes up to a high point. There's sellers entering in with sells. They're happy now that we're getting a reaction from that. And we're seeing this, what we call ping pong price action take place. So I'm on the charts. It's like 9 a.m. and I'm observing this. And a great rule of thumb to have is this, if I understand how a lot of retail traders are positioning themselves, how can I think from an institutional perspective to wait for what we call a stop hunt to take place? Because this is something that we'll see happen, time and time and time again. And I think, everybody that's on this call, whether it's live or on the recording on YouTube or on Zoom, can relate to me when I say that there are trades that will be in, maybe we're buying this support. Okay. And we got a stop loss beneath those areas that we just discussed. And you'll get stopped out of the trade, just like what we're about to see take place in a second here. Aggressive sell-off, stop loss is triggered. We can see that this low gets taken out as well. Okay. You get stopped out. And then almost immediately afterwards, your trade actually ends up going in the desired direction that you had. Right. I mean, this is time and time and time and time again. So I will position myself. We rewind this again a little bit here. I will think to myself, and I'll always do my best to be objective, separate myself from my bias to see the bigger picture, see the picture from a market maker perspective of, hey, listen, we understand that stop hunts have to take place for the institutions to position themselves with their big capital. And there's recordings where we dive into this in more detail. So if you want that context, I'm happy to send that to you guys. Just feel free to reach out to me. Or actually, I can drop it in the chat if you guys want it. On Zoom, I'm happy to share it here, or you can reach out to me on Instagram. But so I say all that to say, my mindset is with this is like, okay, we have equal lows, we have relatively equal highs. There are guaranteed to be people that are buying this low, anticipating price to go higher because it's an area of quote unquote support. And then there are people that are guaranteed selling these highs. Keep in mind, this is the 1 minute time frame, man. You'd be surprised at how many traders are positioning themselves from what time is this? We come into this range at 8 a.m. We're here until around 9:20. That's about an hour and 12 minutes. Exactly an hour and 12 minutes. There's a lot of traders that are taking trades and positioning themselves during that 1 hour window. So the amount of liquidity, the amount of money that is being built and established above and below. Whoa, those are massive dollar signs. Hold up. Oh goodness. How do I? Why are these so big? Okay. We got massive amounts of liquidity building up to the upside. We got even more liquidity building to the downside just because of how many points price, came in, quote unquote, respected this area of support. So for me, I'm looking at this, I'm like, okay, cool. I want to wait for a run to the downside to take out this liquidity, to then enter buys to ride to the upside and take out these highs, or vice versa. And I'm literally, this is okay, this is a range. I'm waiting for the break to either the upside or the downside. I'm also waiting for this to capture these highs and then go and take out the lows. Those are the two scenarios that I'll be waiting for in this instance. But because we're bullish on the higher time frames, I'm going to lean towards buys. Okay, so when this took place, and we're seeing this, take place at around 9:20 a.m., we aggressively sell off. When we look at the 5 minute time frame, let me just delete these dollar signs now and all this extra noise that we don't really care about anymore. We see an aggressive down candle that is capturing any sort of buyers that had stop losses beneath this low, stop losses beneath this low. This whole higher time frame area of quote unquote support gets taken out in a sell to buy motion where we then see price, fly to the upside. So the thing to consider here is, and I talked about this last night in Toronto too, you take a look at any major moves on any asset class. Doesn't matter if it's currencies, doesn't matter if it's crypto, doesn't matter if it's, gold, anything. You'll find that there are stop hunts on both sides of the market prior to major moves. We'll see the highs get taken out, so sellers are no longer positioned when the market dumps, but we'll also see the lows get taken out, so anybody that's in buys won't catch that real big move to the upside. So this is an example of the lows getting taken out before we see a massive move to the upside. And it's not just the smaller time frame lows, it's the higher time frame lows as well. The low from Monday gets taken out. We see the low that was created on Tuesday morning at 12 a.m. gets taken out. So there's a huge run on what we call liquidity as a result of this move, while also inducing sellers. Okay, check this out. This is, and space repetition is, the key to all mastery, the mother of all learning. So you guys are going to hear me talk about this on session after session after session. But for this specific example, when we have a breakout of a range, right? Think about the break and retest trader who sees a breakdown to the, a breakout to the downside. We're waiting for that retest to sell and ride this lower. So as price comes into this area, we're seeing sellers being induced for break and retest. We're seeing, those breakout traders being induced when we see, price come and trade beneath these lows. They got their sells in here, stop loss above this high. Okay, there's a huge inducement of sellers as well. And then we just go and we blow through all that sell liquidity that's being induced as a result of this little, realistic 10-minute, realistically just a 10-minute breakout to the downside that was just sweeping liquidity to trade higher. Okay, so this is a lot that I'm sharing for this trade, but these are all the things that I like to take into consideration before positioning myself. So when this took place, and considering the amount of quote liquidity that was captured, when we were in this area, I'm still holding off on taking the trade, holding off on taking the trade, and then as we're starting to see this trade to the upside, and the proof being in the pudding that hey, this is a liquidity capture and we're getting ready to make that move higher. That's when I end up executing the trade. My stop is beneath this low because this was the move that did the damage, that took out the majority of stop losses. So if my theory is that hey, This was a sell to buy motion, and the institutions are looking to bring price higher. It wouldn't make sense for price to trade beneath this low. All right, so that's why my stop loss is beneath that area at around 156.577 specifically. And based on my entry, it's no different. Take this in. My entry is actually no different than buying the support. I'm just waiting for the stop losses to be triggered from people that are buying the support to position myself in that move to the upside. And in a perfect world, we actually see, this sell to buy price comes back into it and mitigates it. It just so happens that we didn't actually end up seeing that in this particular example. So it was a good thing I entered where I did, because I wouldn't have been able to get an entry otherwise. Price would have just run away without me. No imbalance fills. There really wasn't many opportunities to position myself at all here, based on those kind of mitigation or imbalance fill concepts. But specifically just looking at this as like, hey, we ran and we captured liquidity. We're getting that evidence of price wanting to trade higher. And in the grand scheme of things, we're bullish. If we're bullish, I want to position myself in buys. And here's where my take profit came from. All right. If we can take a look at it, we can consider, okay, cool. This is a low. This is a high. This whole area is just a retracement, with this being the lowest point. If we were to fib this, for those of you guys that were on a session where we talked about fibs previously, this is actually a hell of a deep retracement. If we were to measure this out, line chart, let's go on the line chart real quick. Okay, we can see that this would have been from low to high. It's about is like a kill zone retracement, what we call a kill zone retracement on the line chart. But on the candlestick chart, this thing wicked to like the Black Friday discount, 886. Okay, so very deep retracement. And for me, I'm looking to target at the very least with this setup from the buys of basically this low point, this being the anticipated low of the week, by the way, and we'll talk about that if we have time in a little bit here or next week. I'm anticipating at the very least price to come and create a new high above this, because we have a higher low. We're anticipating a new higher high. So that's why my take profit ultimately on this trade was at 157,200. For those of you that were on the Fibonacci call that we did recently, the other areas that I'll like to target sometimes are these ones up here based on the fib. And again, we have the recording for that as well, explaining the why behind that. And if we actually take a look at where price traded up into and has started to reject once again, it's literally in those areas. So if I still had a portion of my position running after taking profit here, I'm then going to be looking at those fib levels to anticipate where is that next higher high going to take place before we get the next retracement. And so we came up into it once, we retraced. This is now a new low and a new high. And actually, we would then want to be measuring the fib from this low to this high if we're taking a look at this on the 1 hour. But I digress. And that's maybe a conversation we can come back to again at another future session. But so that was the mindset behind this trade. So wanted to go over that. Not going to complain taking profit, quote, early at a 1 to 7 risk to reward. You can't complain. You can't complain with that. A lot of the times I'm just looking to close out at like a 1 to 5, or a 1 to 3 is where I'll look to go break even and then take profit, partials, I should say. And then at a 1 to 5 typically as well. The only reason why I was looking to stretch this to a 1 to 7-ish was because, again, hourly time frame, this was a smaller time frame entry. Hourly time frame high being right here at just under a 1 to 7 risk to reward was something that I was content with in this trade specifically. So I took partials twice along the way, closed out the full position, what was left at a 1 to 7. So that was the trade on USD JPY. I wanted to go over that, and I'm just going to read the chat here. So we got some questions. We got yes, please, for the recording. Okay, bet. Let me share that just now. For those of you that are on the YouTube stream, you can reach out to me on Instagram and be like, hey, send that recording that talks about smart money basics. Okay, this is the recording called Smart Money Basics. And I'll drop it in the chat for those of you guys that are on Zoom. You can click right into it. And then if you guys want that recording on Fibonacci as well, I'll drop that in the Zoom chat. And then you guys can also request that if you're on the YouTube or watching the recording. Just hit me up on Instagram and be like, hey, I want that video that talks about Fibonacci, and I can send you that one as well. But let's see here. Drop Smart Money Basics in the chat, and then the Fibonacci training is right here. Cool. So for those of y'all on Zoom, I just dropped that in the chat. But okay, cool. And then the other question that we had in here, is there an ideal time frame to analyze depending on the pair? That's a great question. I think the biggest thing is, every time frame is ideal. It just depends on the trader. Are you someone who likes to take swing positions? So, looking to hold a trade for more than 24 hours. Are you someone who likes to scalp? Are you liking to be in and out of trades relatively quickly? Are you what we call an intraday trader? So you might take a position and hold it for a few hours, up to 24 hours. I think it depends on the individual. But to answer your question more specifically, I will say this: you will see on the 1 hour and the 4 hour, very consistently, you will see what we call FU candles or FU kind of setups where we see huge runs on liquidity very consistently on the 1 hour and the 4 hour, and they're easy to identify. Not only are they easy to identify, they're usually respected quite consistently as well. So, and what I mean by respected is essentially put, you can look to enter based off of those sell to buy motions or those buy to sell motions. So hopefully that makes sense. And if anything's not clear, by the way, feel free to just chime in and let me know. I'm actually going to make it so that you guys can unmute in the chat, in the Zoom, I should say. So if you guys do have any questions, you want to vocalize them, you're welcome to unmute. But that was a setup that I wanted to share. And it's cool too, because this was actually one that was shared in the Menara group chat as well. So that same bias, that same idea on USDJPY was one that was actually shared in the Menara group chat, was one that I took and considered in this analysis as well. And then I was just waiting to see that run on liquidity before entering myself personally. So for those of you that were in the trade that was shared from Menara, pretty much the same idea, the same setup, and the bias was absolutely on point and something I was in confluence with. So that's why I ended up taking this trade. And that's the beautiful thing about it, is like, I wouldn't even look at USDJPY if it weren't for me being in the Menara chat and seeing that notification from Ralph. So shout out to Ralph one time, because typically the mains that I'll focus on are the ones over here on the right side. So DXY, Euro USD, GU, USD CAD, and then gold. And then a handful of cryptos as well. UJ is not actually in my list of main focuses, but as a result of Ralph doing his thing and sharing the sauce that he always does in terms of trade ideas and value, you already know the boy had to tap in and be a part of that move. So shout out to Ralph one time. But okay, cool. So we spent a little bit more than 10 minutes going over UJ. But Fiddy, you want me to go over gold? Is that what you're asking for in the chat? You let me know, please. Okay, cool. We can take a look at that. Absolutely. So only other thing I'm going to share real quick is on Bitcoin. And for those of you that were on that call where we talked about the Fibonacci in more detail, and some of the unique ways in which you can use the fib that are like unconventional, I talked about how you can measure full volume candles. So basically what that means is like the weird time frame candles that you would see as like a last down candle before an up move or a last up candle before a down move. Measuring those candles with the fib to see the 50 and the 80%. And we actually saw, a nice area where we traded into today. And ultimately what I'm seeing as the potential bottom or kind of low for the week on Bitcoin get established. We're going to have to wait and see what actually ends up happening with this. But this was something of significance that I took a look at on Bitcoin and that I wanted to share with you guys. We're in a very interesting area on Bitcoin as a whole, where one of two things is about to take place. All right. First things first, this is a possibility. I could be very disappointed that we didn't retrace lower than where we did at like 58K. by price coming and creating a new all-time high at 74,000 and beyond. That's the one possibility of where we're potentially on the brink of. Or two, we're actually going to continue to respect this counter trend that we're seeing on the daily, where price we created a high, pulled back, we created a low, retrace, created a lower high, traded lower, created a lower low. Okay. Technically, some people will be looking at this as a lower high and then the creation of a new lower low, and now we've actually broken structure. For me, with this setup, I might also consider this to just be one full move and this actually be the creation of a lower high to go lower. But that's like me just kind of hoping that we still see Bitcoin coming down to like 50K. And the reality is, it's tough to say if we're actually going to see that or not, based on market structure. So, as much as in Don's perfect world, we don't live in Don's perfect world. I talk about this a lot. I wish we did, and my markups were accurate every single time, but it's not always the case. So from this high to this low, we saw a break of structure on the daily. And we've been in this area where prices, creating lower lows and lower highs consecutively, but then we did see a break above this. So while part of me wants to consider this all one move, and us technically, from that perspective, still being inside of this range, and we just barely came up and kissed this on the line chart. Part of me is just biting the bullet here and thinking that this whole retracement or reaccumulation on Bitcoin since, realistically like the middle of March to where we are right now, could potentially be coming to an end for price to continue going higher and go and create that new all-time high once again, more preemptively than what we normally see with Bitcoin and all of cryptocurrency. So with that being said, seeing this on the smaller time frames, intraday time frames, we have on the 4 hour, we've been in this uptrend since kind of the beginning of May, and we're at a pivotal point right now in price, where from this low to this high, on the intraday time frame, this is a trading range that we're currently trading inside of, and price is at a key area on the fib to either respect and trade higher, or for price to just give a bounce and then go lower, which I would not be opposed to, because, like I said, Don's perfect world, we actually come down to like 50K, that'd be sweet. But so I'm kind of bouncing all over the place with this. I say all that to say this was an area that I had identified from previously, where we had seen on Bitcoin, this was a low, a high, higher low, and still waiting to see if we can get that higher high. But we had an area of accumulation where, price was in this area. For those of you that are familiar with Wyckoff, this would be an accumulation schematic on probably the 15-minute time frame. It would look the cleanest. But we see that, kind of choppy sideways price action, a few runs on liquidity. This was a big one right here, where we ran between or below these wicks, as well as beneath, if I'm not mistaken. Let's see. We might have respected this low. Yeah, I think we did. Yeah, we did. But nonetheless, still some liquidity that was captured there. And then ultimately we get this push higher with this one last down candle that kind of was the cause behind this effect. All right, this was the sell to buy motion, yet again sweeping some lows. If we were to zoom in on this right here, we can see that, smaller time frame, we were consolidating in here. We see an aggressive push to the downside. This was at 9 a.m., also a key time for us to be on the charts. And then we see that reversal, so that sell to buy motion that we like to look for. And so for me, when I look at this candle, I can take it just from the hourly time frame and be like, okay, cool, I'm going to open or mark the open of this candle in the 50%. Right, from just that perspective, that was something I was considering and taking a look at for price to retrace into this before we continue to go and create that new higher high above this. Okay, but another part of me was like, you know what? We just did that session on, a previous call talking about Fibonacci and different unconventional ways to use it. And I was seeing this on the 15-minute time frame. Like this actually all kind of came in a relatively short period of time, just a quick boop. We actually came and mitigated this candle as well, and then flew. So I wanted to see if there was a full volume candle, which basically translates in English to one full candle body representing this entire high to low, or as close to it as possible. So being that I'm on the paid version of TradingView, I can go on these like weird time frames to try and find the, or at least as close to it as I can, the full volume body of a candlestick, or basically just, we can see that there's this down candle and then this one consecutively right after. Ultimately, I'm looking to find those two candles as one and as full of a candle body as possible, kind of like this one, but, ideally with not as much wick. So I was going through, I'm like, okay, cool. Let's look at the 10-minute time frame. Can't see this as one candle there. Let's go on to the 20-minute time frame. I was like, okay, closer, but still not quite there yet. And then the 22-minute time frame is where I was looking and able to identify this as one candle. Still a bit more of a wick than what I would like, but nonetheless was something that I was just like, okay, cool. I'll go with that. Because the 23-minute time frame wick's even bigger. And so I just took it from this time frame. And you can be a little bit loose with, how much of a wick there is, what time frame you use. But all of that to say, I took this candle and I measured it with the fib from low to high. I identified and marked this up as being the 22-minute candle. And what we like to see sometimes is deeper retracements into these institutional candles, these last down candles before a big up move. Price to come back into between the 50 and the 80% of that candle, the full volume body of that candle, to then give us a reaction to the upside. And I also marked up the open of the 22-minute as well. So this is where the sell pressure came in to come and sweep the lows. It started at the open of the candle, so I marked that up as well. And if we take a look at what we saw today and yesterday, first things first, we came into this area, which was the open of that 22-minute candle. This was yesterday at around, what time was this here? It's around like 2:20 p.m. And this is actually a sell to buy motion as well. You can see, like, y'all will see this like frequently on the charts. Area of support, we sweep the low of that support, and then price trades higher. You'll see it time and time again. Or look at this, relatively equal highs. Here's a high back here as well, and a high back here. And we can see that we see this huge buy motion to go and just take out all of these highs. This high back here as well. You can see that this wick just barely, take this in. See how this wick just barely pokes above that previous high? It's all just a run on liquidity to, ultimately drive price lower in this instance. So we came into the open of it, got a reaction. And then we see price come down once again today during the morning session to accumulate at this low down right to the 50%. So we're at kind of like a make or break point right now with this, where we've traded into, at this point, we traded into the 50% of this, last down candle on the 22-minute, which again is a wonky time frame. And especially if you've never seen this before, you're like, bro, what are you doing looking at the 22-minute time frame? It makes no sense. And normally it's like, bro, I don't even worry about it unless I'm looking to capture this in as much as possible in just one candle. So we came into it, we're getting this reaction so far, and now it's just a matter of, okay, cool, we got the reaction initially. I'm not positioning this. This is just something I marked up, by the way, for the record. If I was, I'd be break even at this point and just hoping that, we don't see price come back. But at the same time, it's like, I kind of am hoping the price comes back and just, trades lower into this 50K area anyway. It's just like I'm detached from the outcome of this trade, really. But if I was, in this position and officially exposed, this is actually, we came into this outside of my trading window. You'll notice we came into this at 12. And for me, I'm done executing trades with some exception on crypto. But today I was like, man, I hit a 1 to 7 yesterday. I'm good. I'm not going to worry about taking this. But we did come into that area. And so now I'm curious to see, from where we're at right now, can we get a continuation to the upside? Is this going to, in fact, be a mitigation play from this last down candle before this up move for us to go and ultimately create a new high above this and really and truly, based on the 4-hour time frame, continue to the upside to actually make a new high above what we're seeing right here? And if I was in this trade and if this were to play out, that'd be a 1 to 20 risk to reward. So it's crazy how precise you can get with those unconventional kind of mind or more fine-tuned ways of using the fib, but definitely more advanced than I wanted to get into with that. All with all that being said, but still something I wanted to cover. So basically, long story short, pivotal point for Bitcoin. Really curious to see what happens over the next 2 days. Going into Friday, are we going to continue to see this push higher, or are we going to fail to kind of respect this low and end up reaching it to trade lower? So pivotal point. Wanted to touch on that. I know somebody mentioned about gold. So we got, let's see, it's like 5 minutes to the top of the hour. I'll do a quick kind of outlook and analysis on golds. And then next week, just because of the time, I know for a fact we're not going to be able to get into the topic of how to catch or time the top and the bottom of a weekly move. So next week, I'm going to make a point. I'm actually going to make the point right now, so I don't forget next week to go over that. Let me know if y'all are getting some value in the chat. Drop some fire emojis, some whatever your favorite emoji is. Try and keep it PG. Some of y'all are weird with your emojis, man. Sometimes it's crazy. But drop your favorite emoji in the chat if you guys are getting some value so far. I just want to make a note of this. Discuss how to catch the top or the bottom every week. What is this called again? Bars. That's what it is. Okay, cool. Bar candle analogy. All right, cool. So we got that in the note for next week. So we'll talk about that next week. Cool. Appreciate the emojis, fam. We got all PG emojis. I'm proud of you guys. So sometimes I'll be on sessions, man. It's just there's some out of pocket emojis that just come out. It's like interesting. I didn't realize that me charting, would call for that emoji. You can fill in the blank with what emojis you can imagine would be dropped on previous sessions. It's rare though. This is a good group. We got good people on these calls. I got a feeling golds will drop around 70 pips by 1 a.m. Eastern. Yeah, I think we're definitely in a bearish state. Shout out to Idris one time. He called a banger of a sell. I'm telling y'all, man, I'll keep saying this on these sessions. Like, I'm gonna even go as far as to stop sharing my screen to like make sure I'm speaking into your soul for this one. You gotta take the trades that these educators are calling out, fam. Like bangers, whether it's Ralph, whether it's Idris, whether it's somebody on a live session. Like, do not sleep on these trade ideas, man. Like there was a banger that was called today on gold. Absolute banger. It already hit TP2 from where it was called out. This is where it was called out. I'll literally show you guys, which chat and everything, just to make sure that you guys can go ahead and do what I did, which is pin the chats that, these sessions or these ideas are called out from. But real quick, right? And it's great because Idris goes into these markups and these call outs that he shares in a lot more detail as well. But you can see this was at 10 a.m. this morning. Sell golds. This was the entry. All right, 23.44. Stop loss was at 23.50, just about. And these are the TPs that he's looking at. And based on the price action that we're seeing, wait, you guys can see this, right? Yeah. Okay, cool. I'm sharing the right screen. Perfect. He's sharing the updates, obviously, as the trade's playing out as well. But to take a look at where we're currently at, and my bias is fully in confluence with what Idris is looking for and also what, Fiddy was sharing in the chat, looking to see this thing to continue dropping. Take a look at where we are, right? We're very clearly, based on the hourly time frame, in a state where this is looking to be a bearish week. All right. Technically, I don't know why this is saying Thursday already. It's a bit preemptive. We're still a couple hours out from Thursday. But I would say that more likely than not, this, for now at least, I mean, this could change by Friday. We'll see. But this right here was potentially the high of the week. And now what I would be anticipating at the very least was, it would be for price to come and trade beneath these lows, which if we take a look at where Idris is looking to take that third take profit, it's at 23.20, which would be just right around and down here. Whoops. Oh, okay, we're back. Let's see, right here. Okay. So that would be after we've breached both of these lows. These are also good places to kind of just monitor price, see if we're gonna, get a bounce off of them. But I think, this is a great area for price to trade down and into. And also it's, back in here where we saw some consolidation prior to a breakout higher. The top of that range is literally where he's calling for TP3. So right in alignment um, with, ultimately what I would be seeing for gold as well. So, I do see price continuing to sell off. I think higher time frame perspective, like we're in a position where based on the price action that we're seeing here, this thing's starting to really exhaust. Notice how this wave up, this wave up, these are both aggressive moves. And then this most recent move up, much smaller, much less aggressive. We didn't blow through the high quite as much as we did the previous two times. And that will be a sign of the market starting to exhaust, of the market, potentially being on the brink of a reversal on the daily time frame or whatever time frame you're looking at, really. So for me, we're definitely at a key area in gold here where I think it's quite likely that we actually see a break of structure and a higher time frame retracement to potentially all the way back at like 2K for gold. So that's like longer term kind of what I'm anticipating. And based on the daily time frame, this is going to be a key low for us to come and breach. All right, if we can get this, some sort of retracement up into here maybe, and then continuation lower, or sometimes, gold's really trendy, we'll just see a small retracement, little break and retest kind of vibe to trade lower. That's what I'll be looking for on the daily time frame. 4 hour, this is looking very weak. Looks like we're going to continue to sell off. And then the 1 hour, we just came and we broke structure, or not really. I wouldn't really look at this as like a break in structure because we technically are continuing the bearish trend. We failed to break this high. Taking a look at, what we were seeing in terms of price action, price is just, creating these lower lows and lower highs consecutively. We see a bit of a counter trend here, but now we're trading and we've breached this counter trend low. So definitely looking bearish on golds. In terms of points of interest, what I would be looking for, I'd be curious to see, let's see here. I mean, there's a chance that we get a bit of a pullback going into tomorrow's, kind of New York and London session. What exactly would be 70 pips? I know, Fede, you were talking about 70 pips. So 70 would be down and around like 23, 20, 26, 27-ish from where we currently are. Depending on how you calculate pips with your broker, of course, right? This might be 700 pips depending on what broker you use. So let's look at it from the other perspective. I mean, 70 pips on a different broker would be like right here. So I'm pretty sure you're probably referring to, a broker that would be counting pips, in my opinion, normally. Not to, disregard any brokers that count it differently. But yeah, 23, 27. Yeah, I think I'd be confident in that. We might see, I like what we just saw in terms of price during the Asian session here, where we saw relatively equal highs. We aggressively traded above that. And now we're seeing a pretty big sell-off here. We might see this. That might actually be an opportunity for potential sells. You know what? I'm curious. I'm going to take a look at Monaro real quick and actually see if we have any sort of setups that would be of interest. over here. So let's pull this up real quick times. So hold up. Where's my buddy Gold? There we got all 4 hour time frames on commodity metal. That yeah, we actually don't even need commodities on, just metals. Interesting. Let's see. Refresh. It doesn't look like, I mean, unless maybe I'm putting this in wrong for oh, hold on a second, fam. I think we might just have to reload it. Okay, here we go. So let's see. Yeah, so I guess there just isn't anything for XAU USD right now, but there is some for I mean, we got some for silver. Um, oh no, there is one. Okay, what's going on here? Okay. Yeah, so there's currently nothing for gold specifically, gold against the US dollar, but there are some setups for like gold against the yen. But I mean, obviously we're focused more on gold against the US dollar right now, and it doesn't look like there's anything from Monara specifically. What about silver? Yeah, nothing shown for silver on this either here. So yeah, I think right now we're just in a position where we got to wait and see overall what price action continues to develop. There's really a couple scenarios that I would be waiting for here. It's number one, are we going to, and we might actually come into this like just now, are we going to respect, this kind of last up candle or last couple up candles prior to this big down move? Are we going to come back and mitigate that to continue lower on the 5 minute? Or are we going to potentially come and sweep this as well and trade back up into like maybe this imbalance? But that would be like back and close to entry from Idris's call out at least before continuing lower. I think both would be scenarios to kind of just keep an eye on going into London session. London session we'll see increased volatility with I mean, pretty much the whole 9 yards, right? We'll see specifically with euro, with Great British Pound, as well as gold and things of that nature. But yeah, that would be my outlook on gold. So definitely good points to consider. But ultimately, I mean, I always will base my bias on the higher time frame, right? And for me, it's like, okay, we just saw this push up. Yeah, we're still bullish. We would need to, it's kind of like that innocent until proven guilty, right? We're bullish until proven bearish, and us taking out this low would give me the conviction of us going lower. However, there's ways you can anticipate reversals before they happen. And for me, the fact that this wave up was much smaller than the previous two is a sign of weakness, right? It's a sign of weakness in this bullish trend. So I would want to see, break of structure, retracement, continuation lower on the higher time frame. But smaller time frames look good. It's just a matter of, or what kind of price action we're going to get between now and, us going and actually creating these lows that we're looking for. So either way, I mean, already, achieving TP2 with a 100 pip move is huge from Idris's play from earlier today. So again, definitely don't sleep on the trade ideas. Take those trade ideas. We're constantly saying, don't sleep on the trades that are shared in those group chats, and also the setups that are shared with Monara as well. Right, they got the Monara bot that will send you the notifications for what specifically you're looking for, your pairs or what you like to focus on, directly on Telegram too, which is super cool. So, but with all that being said, fam, I think we're gonna wrap the session up here. I'm just gonna double check and confirm I didn't miss any other questions in the chat. Having trouble with your Monara chat. Is it the Monara FX bot, Brent, or is it one of the other two, which would be the Monara trade sessions or trade ideas and sessions, and then there's also the Forex and Monara training, which is Idris and then Ralph's chats respectively. Let me know in the chat. You can feel free to reach out to me too. I'm happy to help you out with getting those fixed. Telegram one. You mean like the Monara FX bot on Telegram, or the one of the other two ones? Monara FX bot. Okay. Yeah, that one you might have to, I think. Hold on a second here. Earlier today, I think Richard was troubleshooting that. Had to type alerts. Yeah, just mess around with it a little bit. You might have to just make sure you read everything that's on like the website for getting it set up. And you might just have to, be a little bit finicky with it to try and get that resolved. But you should be good to get that resolved. And if you need a hand with that, you can message in the trade talks room, or the trade talks channel in the Telegram, and I'm sure someone will be able to give you a hand with it as well. For sure, brother. For sure. Let's see. Yeah, 49K would be great on Bitcoin, man. I would love to see that. Da, 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 da. Cool. Yeah, I think I'm good with everything in terms of the chat and the messages and everything. So yeah, fam, I think it's gonna wrap up everything for tonight's session. The one thing that I will share is at some point in the near future, there's a possibility of these Wednesday sessions just being moved back to Monday and us doing a rotation, Ralph and I, week to week. It's still unconfirmed, and it's a conversation that we're going to continue to have as a leadership core. But any sort of updates that you guys need to be aware of, we'll be sure to keep everybody posted on. And the last thing I'll pull up, just for anybody that's on YouTube, because I didn't pull this up earlier when I was mentioning it, any sort of material or any sort of questions or anything that you guys have watching this live or on the recording, feel free to reach out to me on Instagram. This is my Instagram right here. And I'm happy to answer any questions you guys have, or do my best to steer you in the right direction with really going about mastering these quote smart money concepts that we talk about every single Wednesday, and really just steer you in the right direction with your trading. So with that being said, anybody that is not already connected with me on here, feel free to reach out, and looking forward to catching you guys again soon, either next Wednesday or on the future sessions that we decide to do, depending if there is a date change or not. But as of right now, it'll be next Wednesday at 9 p.m. Eastern. So I look forward to seeing y'all there. Enjoy the rest of the trading week, trade safe, and sending you guys a bunch of love and abundance vibrations through my Logitech camera, in which I'm looking through right now. So go out there, crush the rest of the week, fam, and let's get it. I'll catch you guys very, very soon. Peace and love, fam.